Right.
That discipline makes it ultra easy for me because I think because of this everything code liquidity cycle, everything is correlated, every asset in the world, which makes it and it's all driven by this same debt refi cycle, which makes it, I think, the easiest macro risk-taking environment of all time. Because the central banks have also taken the left tail out by saying we can't let collateral fall too far, so we will debase currency. Holy shit, if this is the case, then we have the simplest, easiest risk-taking opportunity of all time.
In the current video, Raoul Pal discusses the current position of the macro crypto cycle and provides insights into the future of investing in digital assets. The topics covered include airdrops, liquidity factors, managing information flow, and other related subjects.
It's the new underlying infrastructure for the internet, as we've talked about. And people get confused. When I go around marketing our Thunder funds, people get confused still but there's this Bitcoin narrative, this narrative, that narrative. And I'm like, stop. These are all decentralized businesses that sell block space. And they have different qualities to their block space or a different narrative on what makes their block spaces effective. And that is, once people see that these are essentially decentralized businesses that operate and sell block space, people start to understand. And what's unique about this infrastructure layer, it's the first infrastructure layer in history that we can all participate in because of the behavioral incentives of a token system versus equity. And so when I look at it, I just look at the growth of the space, and it grows at 100 and something % a year, which is twice the speed of the internet, because obviously it's built on internet rails, so it should go quickly. And I just extrapolate that trend out, and I look at it, and it's like, well, it's a $2.5 trillion space today. If we carry on, by 2032, it's 100 trillion. I'm like, that's the largest accumulation of wealth in all human history in the shortest period of time. Even if I'm wrong by 50%, because I'm a total moron, it's the same as 100 years of value accrual of the S&P 500 in 8 years.
Right.
It's bananas. It's because we can own this adoption layer, and all of these businesses selling block space, that's all it's about. Best thing is just try and capture that growth first. If you're going to do anything in the space, stop trying to focus on the one thing. Just capture 2.5 trillion to 100 trillion. You'll be absolutely. So I try to explain this to people a lot. I don't care what people's philosophies are. That's not how you make money. What you make money on is owning the best performing asset on a risk adjusted basis. So what I tend to find is that the mid to upper part of the curve, which is networks gaining adoption, do best. Ether last cycle, Solana this cycle, and whoever it's going to be this cycle, whether it's Sui or whether it's Near or whatever it is, I don't know. We will see that, right? That is the easiest opportunity we get in the space to generate wealth. So firstly, focus on that. That's the do not fuck this up thesis. If we're going from 2.5 trillion to 100 trillion, do that and you'll make a lot of money.
Yeah.
And so then I just filter out as many people as possible. I really only get signal from a few people that I'll ever listen to. If you tweet something, I'll always read what you tweet because I think you'll have a high signal to noise ratio. Most people are high noise to signal ratio. And so I'll observe it for sentiment and any nuggets, but I try and filter out as much as possible and just stick with, unless something shows that network adoption is slowing, I'm right. So just capture that.
Right.
Then I don't FOMO in the rest. I just don't do it. So I don't spread. I did that last cycle. I tried to spread amongst this narrative, that narrative. And what I do now is really simple. It's idiot proof. I just put the chart against Solana. If something looks like it's a sustained trend against Solana, I'll allocate some capital to it. And again, only about 10% of my portfolio will I do in that kind of stuff. But you can make a lot of money in those. And so, that's what got me into WIF and Bonk because they were outperforming Solana. So I'm like, okay, I can do that. And now, if anybody shills me something, I just say, well, show me the chart outperforming Solana and I'll take a look.
Right.
That discipline makes it ultra easy for me because I think because of this everything code liquidity cycle, everything is correlated, every asset in the world, which makes it and it's all driven by the same debt refi cycle, which makes it, I think, the easiest macro risk-taking environment of all time. Because the central banks have also taken the left tail out by saying we can't let collateral fall too far, so we will debase currency. holy shit, if this is the case, then we have the simplest, easiest risk-taking opportunity of all time. So hyper-concentrate, I think, is the way. Now, there are people who can do the tail part, hyper-concentrate and get it right. But the probability is lower. And then you break the first rule, which is don't fuck this up. Because if you get taken out in the cycle and lose your capital, and this cycle is going from 2.5 trillion to 100 trillion, that's bad. I'm really, when I look at it, I'm 90% sold. Why?
Yeah.
Because the chart is outperforming Bitcoin and ETH. I mean, there's no philosophy behind it. It's like, I like Solana, love what they're doing, and it's proving it on the chart. If it doesn't prove it on the chart, it hasn't got network effects. Because you and I have talked about this. I built that Metcalfe's law thesis around this. And basically, I found that tokens are actually priced rightly. Almost everything prices pretty much according to the number of active users and the total value transacted. So in which case, price is good.
Crypto analysts expect Bitcoin will reach $110,000 on its next major rise, despite lower highs and lower lows on the BTC price chart. The next leg may lead Bitcoin to $110,000, traders say. V and Capital founder on July 17, Michael Van Depop posted on XComs, while other traders say Bitcoin is failing to hit past highs, with each new high falling short of the last. The pattern of lower highs and lower lows continues despite veteran trader and analyst Peter Brand stated in a July 17 post on XVenPop doesn't seem as concerned, linking the volatile price of Bitcoin in recent times to the struggles faced by Bitcoin miners due to rising operational costs and reduced finding rewards following the April havoc. The true Hasri drawdown at its last low on July 1st was as heavy as during the FTX collapse. Given Bitcoin's record $73,700 high, VAP crap March 13, it hit $71,000 many times, but has yet to achieve its record price again. July had 9 straight days without Bitcoin breaking $60,000, a streak that hadn't happened since February 28. Bitcoin's July 5 low of $5.542 was its lowest in 4 months, according to CoinMarketCap, and the next leg is uncertain. Some analysts are more certain when Bitcoin will reach $100,000. Mark Riot Platform's president of research Pierre Rochard thinks Bitcoin might reach $100,000 in 12 months before July 2025. Rochard wrote in July 17 Post that other traders are more conservative. Marco Johansson, a crypto trader and investor, predicts Bitcoin will not reach $100,000 this time. The new low of 53.4 lowers the targets to 81 core 94.
With people with a bit more money, the answer is to rent attention from other participants. So what I mean by that is, like, if I can't do VC, and I agree with your thesis, and I like your kind of anti-cyclicality, I should subcontract the attention of that early space to you. You're going to do a better job. My job is sit on my tokens, do fuck all. If I can do that, that's great. That's why, we started Exponential Age Asset Management because of this tail stuff. We're like, I'm just going to give it to 14 hedge funds, find the best hedge funds in the world, let them worry all day and all night about it, because their focus, their attention is hyper-focused on that. And I think there's some way in that. I also think the markets are going to allow us to coalesce capital around these kind of things. We haven't got tokenized funds yet, but Christ, if we had them, okay, that's going to be a lot better, because you could find an Ansem or a GCR or whoever it is, GSR, you give them the money in a tokenized fund, and they can take care of that part of this. Come with a lot of experience. Doesn't mean I get everything right, but you think out loud, you bring people along and helping people. I get stopped everywhere in the world I go, and people just saying, thank you, you changed my life. I'm like, that's brilliant. But then when things go bad, they go really bad, and everybody, well, not everybody, most people are still grateful, but it just becomes this mob mentality, and it becomes ugly. So you become more guarded. We've seen that with Kobe, and we've seen it with everyone. Ansem is learning it right now. It's like, you can't, because the internet is pretty ugly in how that works.
That being said, good economic news from the U.S., especially greater Wall Street bets on a possible interest rate cut in September, could help Bitcoin's bullish outlook while it continues to recover. As of July 17, the CME Fed Watch tool showed that the futures rate, the the chance that rates will drop by 25 basis points in September has gone up from 67.3% to about 93.5% among traders. This change toward a more dovish outlook picked up speed 10 days ago after the Consumer Price Index showed positive results on July 11. This was seen as good news for Bitcoin and other risky assets. BTC's gains are happening at the same time that $1,347 billion is being poured into Bitcoin-based investment funds, such as US-based spot Bitcoin exchange-traded funds, ADS. According to data from Faride Investors, 11 U.S. spot Bitcoin ADS reported $4,222.02 days to $7,234.4 billion. These positive fundamentals make it less likely that the BTC price will crash again in the near future. From a technical point of view, the price is fighting resistance at $66,000. When it broke through this level on June 18, it lost 20% and went down to $53,500, showing that the bears are aggressively defending this zone. It was necessary for Bitcoin bulls to make a strong daily candlestick close above this level to keep the recovery going. On the other hand, if $66,000 doesn't hold, the price could drop, and people who have long positions will sell them, sending the price up to $62,000. CoinGlass data showed that asks for heavy liquidity were building up above $66,000. This shows how important the support is in this area, and don't forget to subscribe to our channel.